Good day for the market. Is this a breakout above that congestion zone of 2800 to 2850? Could the Nifty be headed even higher from here? Laurence Balanco of CLSA joins in to talk about that. Laurence, good morning. Could the Nifty go back to its previous high of 3100 thereabouts, you think, in this move?
Yes, I think so. I mean, if you look at the price action of the past 5 months, there's a clear range between 2,500 and the 3,100 area. And as you mentioned, with it moving and testing at 2.8 level, I think the structure that we're looking at now should see a test of the 3,000, 3,100 area.
Do you think if it gets there, do you think it will manage to pierce through that level, or that's where it starts turning once again in your eyes?
Yeah, we can't rule out any sort of short-term moves above that area, but I think sort of looking down 2 to 3 months, this range will continue to dominate the trading action, so we don't see any sustainable break above that, no.
Laurence, morning. How many more months do you think markets might remain this range bound? I mean, at least with specific reference to the Nifty, we've more or less held this range ever since December.
Yeah, that's right. I mean, looking at the action, I mean, we could push on for at least another quarter within this range. The positive side of that, the longer that we remain range-bound, the greater the likelihood that it's building a base rather than just consolidating within a broader downtrend. So I think the longer we can range in this pattern, the more beneficial it will be for a breakout pattern. If we actually fail at the 3,100 area in the next month and turn down, the risk would be then that this has been a consolidation pattern. So I think ranging is actually a positive action, and the longer we range here, the more sustainable the base development will be.
The big impetus has come from the run on the Dow and the S&P, Laurence. What do you see on both those indices?
Well, the S&P still testing. The key level to watch for triggering the short term is the 804 area. If we can manage to break above that, we're looking at, again, a retest of the January peaks around 944. A move above that we don't see as a sustainable move at this stage, and would look for more ranging activity there too.
That would still be a very handsome rally if it were to happen, Laurence, from 770 to 940, 950. I mean, that would be 20% plus. Do you see 20% plus left in the S&P then in this leg of the pullback?
Well, looking at the very short-term action, the market is overbought, so we'd look at some kind of pullback to 720 and then another attempted leg up towards that 944, 900 area.
Any sense of where crude is stabilizing after its breach of $50?
Yes, obviously positive price action there. Could really all be dollar-related, but still the move through 50 would suggest that price action can work its way high towards the 70, 74 area. So I see that as a positive development.
Thanks, Laurence. We'll leave it there today. Thanks very much for joining in today. That's CLSA's technical analyst suggesting that the Nifty could go all the way to 3,100, but no more. The S&P too can extend its rally, he thinks, to well over 900 in this current run. And crude, he says, might even see $70 plus in this leg of the pullback. That's his view.